My name is Peter Okong. I work with the Insurance Regulatory Authority as a Senior Licensing and Compliance Officer. Microinsurance, it's a specialized kind of insurance designed and approved by Insurance Regulatory Authority, targeting the mass market. Now, there are very many different kind of insurance out there. We have the traditional insurance, but this microinsurance is a unique kind of insurance, as I've said, which target a unique and specific group of people. Microinsurance, it's associated or it is characterized with low premium and covering low limits. For example, you may be having your assets, say maybe you have one cow and you be like, yes, I have only one cow. How can I buy insurance? Insurance is for the rich. No, even you with your one cow, insurance can cover you and you'll be covered under microinsurance. Microinsurance, it is, as the word sounds, it is micro. We target those small things. We target the small limits. Those are the things we cover, and the premiums are very affordable. So the product is designed in such a way that it is able to address specific needs. Now, these needs are identified through research. When the researchers identify these needs, they go back to the drawing board and design a product which answers these needs. Now, the micro insurance here, it covers the low limits. Should I say, I don't want to say small things, but I would say it covers low limits. Whatever asset you have out there, don't be like, yes, this one here, it is not insurable because it is very small. You may have a small shop. Maybe your initial capital, you started a shop with 200,000. Yes, the shop is there, you started with 200,000. You imagine how long it took you to raise that capital of 200,000. So because of that, the insurance players realized that it is very hard to get this capital to start this small business. Hence, they had to design a product called microinsurance. So basically, microinsurance addresses those people who have not been covered or who had not been covered by the conventional insurance, whereby when you go to buy a conventional insurance company will tell you the minimum premium I can accept to cover you is 100,000. Now, you find that your asset is worth 2 million. If you apply a rate of 0.2, you find that the premium is too small. So what happened is that you find most people were left out because you realize that the amount of money you are paying vis-a-vis the limit of cover were not matching. So this specific product called microinsurance came in handy to address those challenges. Everyone out there is talking about financial inclusion. Now banks are up in arms, they are moving everywhere looking for people to give loans. And indeed, people go borrowing. People borrow money to go and invest. Now, when people borrow money to go and invest, they only think of investments. But at the back of their minds, they know something can happen to this. Now, all along there has not been any product which could, okay, products have been there, but the public has not been aware that actually the small amounts which they are able to get from the bank can be insured. You go to the bank and borrow 5 million to come and start up your business. That business can be insured because should the unfortunate event occurs or happens, you find yourself going back to zero, and the bank will not close their arms and say, yes, you've lost your property. What the banks will do, they'll look for you, they'll look for your assets, they'll come for whatever thing you have and they'll take it away. People have lost land, people have lost houses because they borrowed money from the bank under the name of financial inclusion. And at the end of the day, they fail to return back the money which they borrowed because the business which they invested in were destroyed by fire, or probably thieves came in and broke into the shop and stole their merchandises. Now, when such a thing happens, if you are not insured, definitely you have to look for option B on how to compensate this, and look at an ordinary person down there in the village. Option B may be two things. One, selling your land, which you may be having, and two, probably if you've been having some few animals around, the bank will come and put it on sale. We've seen this happen in many places. So here, insurance, micro-insurance came in. It's the right model to address the challenges which people face with when they go into financial inclusion. You go borrowing money and you don't have a backup. So micro-insurance products are designed to address those challenges or those needs by those who are involved in financial inclusions, or those who may have assets which they feel they are too small to be insured. Right now, I want to insure you that however small the asset may be, provided you love it, provided there is financial interest in it, you can insure it.